Mswatu ingosi thula akayithathe akahambe nayo akayithathe yenza bakhe wone
It's 1400 hours. You're watching Eswatini TV's Market View. This is the Monday edition, and coming up on the program today, we're going to revisit one of Eswatini's biggest industrial investments this year. In a special interview that we recorded over the weekend, Iskender Bekdemir shares the vision behind the 600 million Malangeni cable manufacturing project and what it could mean for industrialization in Eswatini, what it could also mean for exports as well as job creation here in the kingdom. Stay with us for that interview in detail. Coming up later on the program, and as per usual, we will be having our market analysis with our in-house economist, Sanlas Bia, to wrap up the program. But before all of that, per usual, we're going to start with our business news. In our first story, the sugar industry stands to lose an estimated 160 million Malangeni in export revenue as Kenya plans to increase the excise duty on imported sugar under its finance bill 2026, causing Eswatini Sugar to stop shipping to that country. Eswatini Sugar Association Chief Executive Banele Nyamane explains the potential implications of the proposed measure and how it could affect Eswatini's sugar industry. The Chief Executive of Eswatini Cane Growers Association, which is about 500 farmers, also reacts to this development.
According to an online publication, Daily Monitor from Uganda, the Kenyan Finance Bill 2026 proposes an increase in the import duty on sugar from 954 emalangeni 87 cents to 5,092 emalangeni 64 cents per metric ton. This move has created immediate concern for the Eswatini sugar industry, with Eswatini Sugar's Chief Executive Officer Banele Nyamane detailing the impact on local operations. He says shipments have had to be urgently cancelled, particularly those that will not reach Mombasa by this Wednesday, 1st July.
The new tax that has been implemented by Kenya will affect about 80,000 tons of sugar that was yet to be shipped into that market. We are now planning to hold back in shipping that sugar until either the tax is reduced or removed. We do expect that later on in the year, when Kenya stops its own production, they may be able to review the tax. But the impact for now is that our revenues are expected to drop by close to 160 million Malangeni. We now have to redirect or find alternative markets for the sugar that was destined for Kenya. We'll be looking at trying to increase our sales into the European market, because we are anticipating that they will have shortages as a result of the adverse weather conditions that they've experienced in the past month, which is the excessive heat waves. So our anticipated exports into Kenya was 120,000 tons. Part of that has already been shipped. So what we may need to hold back or redirect is about 80,000 tons.
As exports are affected, the impact also ripples down to cane growers who rely on the sugar industry. We spoke to the Eswatini Cane Growers Association's Chief Executive Officer to understand the effect this will have on farmers and the mitigating measures they intend to employ.
The truth is that the effect is going to be adverse, and unfortunately there is nothing growers can do, or very little growers can do, to change that. So we can only look up to Eswatini Sugar Association to do something to mitigate the situation. On our part, what is in our complete control is producing the best yield we can from our farms. So when things get difficult like this, I like to appeal to growers to look inside themselves and do the best that they can to increase the yield and have the quality and quantity of the yield and make sure that we get as much product as possible.
In a previous interview, Eswatini Sugar's Chief Executive Officer Banele Nyamane mentioned that increasing global oil prices as a result of the United States, Israel and Iran conflict have had a negative impact on their exports and total revenue. He stated that the actual monetary impact would be provided when they release their reports later this month. Eswatini Sugar's latest report reveals that the industry recorded strong financial performance during the 2024-25 financial year, with total industry earnings rising to 7.7 billion emalangeni compared to 7.4 billion emalangeni in the preceding year. The report further states that the sugar industry remains the backbone of Eswatini's economy, contributing between 5% and 6.3% directly to the country's gross domestic product. Reporting, Nelson Dlangamandla, Vuminkosi Nzinisa, Mbabane.
In other news, Standard Bank Eswatini has launched the 600,000 Malangeni Pokopela Sinawe campaign. It is a new initiative that highlights the importance of standing together and supporting one another through every stage of life's journey. Speaking during the launch held at the Movie Zone in Eswatini, the head of brand and marketing, Sanele Kumalo, said the campaign reflects the bank's commitment to building lasting partnerships as well as encouraging resilience within the communities that it serves.
Pokopela Sinawe is our growth campaign that we are launching as Standard Bank. You will see we will be using it interchangeably with Keep Growing for those that cannot understand Siswati. But Pokopela Sinawe is basically that we are encouraging our Standard Bank customers as well as any other potential customers to never give up, to keep on pushing. And we are saying we are here for you, and we are with you on your journey of growth.
The representative of Standard Bank's Chief Executive Officer, Mvuselelo Fagudze, shared these remarks.
From a bank that tells people how to grow to a bank that partners customers and walks alongside them. Whether it's an individual saving for a home, or an entrepreneur building a business, or indeed a company investing in Eswatini's future, we want them to know that they do not walk that journey alone.
Standard Bank customers will have an opportunity to win various prizes, including a car, by buying, sending money and swiping through the bank's different platforms. The campaign will run for the next 24 months. Reporting, Nelson Dlangamandla, Vuminkosi Nzinisa, Ezulwini.
All right, we are done with our business news now. We'll go for a net break. When we return, we have a rerun interview from the weekend that we did with Iskender Bekdemir and the developments happening under the Ministry of Commerce, Industry and Trade.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
All right, welcome back. You will remember a week ago, the Minister for Commerce, Industry and Trade, Honorable Mangoba Khumalo, officially commissioned the construction of a major industrial project that is worth over 600 million emalangeni at Nogwane. It is being developed by Eswatini Quantum Works Pty Ltd, and the company originates from Turkmenistan. It is establishing a manufacturing plant for the production of aluminium and copper cables, primarily targeting the export market. Now, the project is expected to create approximately 200 direct opportunities. And today we want to move beyond the commissioning to take a closer look at what this investment really means for Eswatini, its potential impact on industrial growth, job creation, as well as the broader economy. Joining us via our video link is Iskender Bekdemir, representing Aiden Gijela, who will help us unpack the vision behind the project and its expected impact on the country's industrial landscape. Thank you so much for your time, Iskender. If you will, just take us through why Quantum Works, Eswatini Quantum Works, choose Eswatini for this Nogwane, for this 600 million emalangeni project.
Hello. Thank you very much. Thank you for the invitation, first of all. Regarding the project, this project is a part of growing cooperation, first of all, between our countries, Turkmenistan and Eswatini. We were impressed by the support of the government, the friendly people, and the good business environment. We choose Nogwane because it has a good infrastructure and attractive tax initiatives. We also see a strong potential of industrial growth in Eswatini, and we believe this country can become an important manufacturing center for the region. So that's why.
Yeah. Let's address something that is rather a little somewhat of an uncomfortable conversation, which is many Emaswati feeling that a lot of foreign companies do not pay them fairly. What commitment in terms of wages and employee benefits do you guarantee Emaswati here?
Oh, okay. We will first of all, we will follow all labor laws of Eswatini and do our best, and we'll try to do it respect the salary rates. We are committed to paying fair wage and providing good and safe, first of all, safe working condition for all our employees. So we believe that people are the most important part of our business. We want to create a workplace where employees can grow and build long-term careers.
Well, I mean, we are learning that 200 jobs are expected to be created here. From those jobs that are expected, how many would you say are going to be, will go to Emaswati, and that includes in management as well as in skilled positions?
Okay. Well, our goal is for at least 80% of the job go to Eswatinians for the local. This includes skilled also and management position. We want local people to become an important part of company and all levels of the company. A few specialized positions may be filled by foreign experts, but however, in our long-term vision and goals are to transfer the knowledge and have more local people in leadership positions.
Speaking of knowledge transfer, just how valuable and critical do you believe that is going to be for eMaswati, having done, of course, your SWOT analysis and your feasibility analysis and what you saw as a niche or as a gap in Eswatini? How critical is, the skills that and the knowledge that you're going to transfer to eMaswati?
We will provide all training and at the workplace and support from experienced foreign specialists. They will share all knowledges they know with local employees. We also want to give Eswatinian our opportunities to grow and move into a higher position in the future. So training and transferring the skills is a very important part of our project also. We want to help build a strong local workforce for many years to come.
Yeah, I mean, we're also learning that the factory is going to manufacture cables for export. Just how will ordinary eMaswati benefit, as well as our local economy really, benefit from an export-focused or oriented operation?
Okay. If we are speaking about benefits, so for sure there will be several big benefits. First, we will create jobs and salaries. Will support the local economy. Second, we will use local suppliers and services whenever possible. Third, the company will pay taxes and bring foreign currency into the country through the export. Part of our products will be also be sold locally, so helping to reduce import. We believe this project can also encourage other investors to come to Eswatini in this way. The benefits can go far beyond of our own factory.
Yeah, I think that's very, very important. If benefits go far beyond just the factory itself, that is going to be very important. But perhaps, we want to get into the conversation of expansion, because that also informs that more benefits will permeate the kingdom of Eswatini. What additional operations are being considered, and when could that expansion happen, really?
Okay. Yes, for sure. We have plans for future expansion. We would like also to produce traffic lights, road barriers, road signs, lighting posts. So the timing will depend on the success. So the first phase of our project, we want to grow and step by step to make sure that each stage will be successful. As the demand increases, we hope to create even more job and opportunities also.
I want us to get into timelines now. What is the expected timeline for project completion, for recruitment, as well as the start of production?
We expected the construction to be completed hopefully next year. Recruitment will start as we get closer to the end of the construction, and we plan production in 2027, I think, at the end of the year. We will give priority to hiring local people. We are looking closely with the stakeholders to make sure project moves forwards and smoothly and successfully.
Of course, what lasting impacts do you hope that this investment will have on Nogwana in the next coming years, as well as Eswatini?
Yeah. The main things we hope this investment will create jobs, develop local skills, and support the economy of Eswatini. In the future, we hope Nogwana and Eswatini will become an important manufacturing center of the region. We also hope this project will strengthen the friendship and cooperation between Eswatini and Turkmenistan. Most importantly, we want this investment to bring long-term value to the people of Eswatini. We hope future generations will also benefit from the skills, jobs, and industrial development created by this project.
Maybe as a parting shot and on a lighter note, your experience in Eswatini, how has that been and what have been your impressions on a business level as well as a tourism level and maybe on a social level?
First of all, it's Kingdom of the Eswatini is a very beautiful country, very beautiful, very amazing. You have lovely people, very friendly people. So I was very excited, and I'm very happy to be here to help move some projects between our countries. So if I have opportunity to say, I want to thank government of Eswatini, personally, His Majesty also for sure, and all people and with whom I'm touching every day by the work. So for every minister, honorable ministers, for everyone, and for simple local people also. It's a very friendly and very nice people. So thank you very much.
Iskandar, thank you so much for your time. He is a representative of the Eswatini Quantum Works, quite an exciting initiative that should begin very shortly, and he has given us the timelines. We hope that indeed they will be true to their word and hire as many Maswati as possible and that lives will be changed. Let's go for a net break. We shall be back shortly. All right, welcome back. Just from that quick interview now and quickly into our market analysis with our economist, Sanele Sibia, who joins us via our Zoom video link virtually. Sanele, a very good afternoon to you and welcome to the program. If you will, just take us through what the numbers are telling us today.
Thank you, Mr. Ngumalo. Good morning to you. A good afternoon to you and also good afternoon to the viewers. I do apologize for that oversight. So what we're looking at in terms of market this week, Mr. Ngumalo, is we are looking at the non-farm payroll data, which is going to come out on a Thursday this time around instead of the Friday. So that we're just looking in terms of how the jobs market is performing in the US, and that would also paint a picture in terms of the resilience or lack of the economy, and also give us an indication of what it would mean for the Feds in their next meeting regarding the interest rate path. And then also another thing that we are watching keenly, Mr. Ngumado, is the move, from Switzerland to Qatar, where we're seeing the peace talks continuing between the US and Iran. And I think over the weekend we saw some intermittent fire between the two parties there over in Iran, and now that sent a bit of jitters into markets regarding how likely we are going to see trade coming out. But I mean, we've also seen President Trump coming out on Truth Social saying that the military needs to complete their objective so that we ship out. And then we also saw another post on Truth Social coming out to say that we have somehow reached an agreement that's going to lead to a cessation of those intermittent military operations between the two countries. So now that is what is moving markets. And then we're also watching out issues around the artificial intelligence stocks that move right there around the overvaluation and the valuation fears of artificial intelligence. So now that is what we expect is going to make markets as we move on into the 4-day trading week into the US, and remains a 5-day week across the globe. So starting in the US, we're seeing, the Dow Jones Industrial Average pulled back 44.51 points, and the Nasdaq Composite Index pulled back 60.99 points, and the S&P 500 pulled back 3.47 points. And what we note, though, is in terms of the volume of trade, we remain on comfortable levels, right? Or we remain on those pre-war levels in terms of those overall trade volumes. And then in terms of moving into the European markets. We're seeing those fears pulling back European markets. The FTSE 100 is down 30.71 points in today's trade, and the DAX is down 2.14 points in today's trade, and the CAC 40 in Paris is down 35.26 points in today's trade. Now we're seeing markets slowing down a bit in the Eurozone to look into the news coming out of Tehran in terms of that ceasefire, but overall we're still looking at the fundamentals within the European Union in terms of the interest rate trajectory and the inflation thereon. So we're seeing that slow start to the week, and I think what the European markets are waiting for is to take a cue from the US markets when they open later on at 4 p.m. when we see those opening bells in the US. And then coming into the Asian markets, Asia is again clawing back those gains following that post on Truth Social, regarding the two countries having reached some sort of an agreement in terms of those cessation of those intermittent sparks in war. We're seeing the Nikkei up 107 points in Japan, but it's still below the 72,000 mark that we saw last week, and then just trailing slowly as we're waiting and digesting the news. And then also we know the issues to do with the yen vulnerability there in Japan are still weighing heavily on the markets. But we do expect that should we see more news coming out of Doha, there we're going to see a lot of that momentum returning into the Nikkei. The Hang Seng is up 354 points, but still a couple of thousand shy of the 25,000 mark, that pre-war level. So that shows that, there is a lot of pressure within the Hong Kong market, more especially in terms of the basic fundamentals of the macroeconomics, and those numbers that we are seeing coming out of the mainland are pulling the Hong Kong island down. And in terms of Shanghai Composite Index, it's down 46 points, but still the numbers there are showing the fact that we've seen poor retail data in the past couple of weeks in China. So what we're looking at, markets are now watching to see what type of stimulus is going to come out of the government there. And then coming into Johannesburg is still relatively subdued at the 110,000 mark, gaining 596 points in today's trade, Mr. Ngumalo. Now that is largely contingent on that gold story that we are seeing there. Gold is trading at that 4,000 mark, just on that 4,000 mark. And we know that the Johannesburg Stock Exchange is a relatively tech-heavy stock exchange. In Eswatini, we are not seeing any changes. And then coming into the commodities, gold is down 48.7 points in today's trade, trading at $4,047.60 per ounce, while the price of Brent crude is lit up slightly to $73.13 per barrel. So what we are watching out for this week is those news coming out of Doha, those talks between Tehran and the US. And now we're hoping that whatever is going to come out of those meetings this week is actually going to eventually give markets the leeway to go back to those pre-war levels. But right now we are seeing that spark following those intermittent strikes over the Middle East over the weekend. And then in terms of the currencies, the Lilangeni is relatively stronger today given the relative weakening dollar, and we are trading at 16.43 against the dollar, trading at 18.74 against the euro, and trading one Lilangeni for 9.85 Japanese yen. Thank you, Mr. Ngumalo.
Mr. Spear, I appreciate your time and certainly your insights here on the program. Sanele Spear, our in-house economist, taking us through their numbers today coming in from Wall Street, as well as the implications that they have for our local economy and economies outside of Eswatini. It's 29 minutes after 2 really, and we've come to the end of our program. We'll see you again tomorrow. Enjoy the rest of your day. Goodbye.